fundsupermart.com.
Malaysia's GDP was revised upward by the World Bank, and it has forecasted that Malaysia's economy will grow by 4.9%, compared with earlier forecasts of 4.3% in its January report. What is your forecast and outlook for Malaysia's economy for the rest of the year?
Following the first quarter GDP numbers that can be above expectation at 5.6% against the forecast of 4.8%, we have seen many economists upgrading 2017 GDP growth. Consensus estimate in the Bloomberg statistics now show that they are expecting GDP growth this year to come in around 4.7% year on year. Now, in last year's budget announcement announced in October 2016, the Ministry of Finance have given a projection growth of 4 to 5%. We now expect this year's growth to come in at the higher end of this forecast range. We continue to remain positive on the economies for this year. Stronger growth will be boosted by higher commodity prices, sustained infrastructure spending, and also higher exports.
What is your view on Malaysia's record low PMI in June? Is this an earlier sign of economic slowdown?
The June manufacturing PMI has fallen to 46.9 after picking up to the high of 50.7 in April of this year. However, in the same survey, we see the increased foreign orders showing stronger exports. And then we also note that for this year, the IPI industrial production number have been growing above 4% for the past few months. This is higher compared to 3.8% monthly average for the last year. So we think June manufacturing is just going through a soft patch because June is a fasting month, which is seasonally a slow month. So we expect second half manufacturing to pick up gradually. However, its growth pace is likely to be a more moderate pace compared to the first half of the year.
Malaysia's corporate earnings growth in the first quarter of 2017 is off to an encouraging start after 2 years of decline. How much further upside is there for investors, and what is your take on the earnings outlook?
After 3 years of earning disappointment for the market, finally we see corporate earnings growth coming back this year, return into positive territory. The consensus now expecting 6 to 7% growth for the market. We think this is reasonably achievable. This will be supported by stronger infrastructure spending, FDI, higher and commodity prices, and also good export numbers.
Where do you find the most promising opportunities? Are there any sectors that are likely to do better this year?
In Kenanga Investor, we stick to our bottom-up stock picking strategy, and we place less priority to sector calls. Our 2017 investment teams center on beneficiary of infrastructure spending and rising China FDI, manufacturers or exporters with niche products, GLC reforms or restructuring plays, and companies leverage to domestic consumption.
Malaysia export have recorded 4 consecutive months of double-digit growth in 2017. In your opinion, what is the reason behind the electrical and electronics export surge over the recent months?
Yes, the Malaysian export actually have registered very strong growth first 5 months of this year, 2017. This is driven by recovery in commodity prices and also E&E exports. Of course, for commodity prices, we know that oil price and CPO price have recovered significantly year on year compared to last year. So that's what drives commodity export. While for E&E, the export was driven by the upcoming iPhone replacement cycle. Many technology companies we visited are actually running at full utilization and record order book ahead of this smartphone launch.
Malaysia's small cap segment has rallied about 20% in the first half of 2017. What is your view on the local small cap segment? Do you think the rally is sustainable?
After a very strong rally in the first half of the year for the small cap space, we now expect small cap index to correct and consolidate in the third quarter of the year. Seasonally, third quarter of the year is also the weakest period for the emerging market, including Malaysia. We continue to like the small cap space, which offers stronger earnings growth and cheaper valuation compared to the large caps. In Kenanga Investors, our small caps investing strategy is always bottom-up stock picking. We back it by very solid fundamental research and a thorough understanding of the company business model. Therefore, we think in the second half of the year, selective small caps which can deliver strong earnings growth will continue to outperform the market.